Welcome back, D-traders. InstaForex analysts are ready to share their forecast with you, and this trading week is jam-packed with the macroeconomic reports and events. Investors are alert to the US nonfarm payrolls, GDP data, and the comments from Fed's policymakers in order to fine-tune their strategies. For a start, let's analyze the results of the last trading week. The benchmark stock indexes closed mixed on Friday. The Dow Jones looked their strongest performance. The index jumped 152 points to close at 0.45% up. The Nasdaq slipped 0.84% on a Friday. The S&P500 shed just 1 point or 0.03% to close at 4,026 points. The stock market opened in the red on a Monday. The S&P is expected to trade in the intraday corridor between 3,910 and 4,040 points. Wall Street closed sluggishly the last short trading week. The trading volume measured 4.54 billion shares, much lower than the average volume of 11.25 billion shares for the last 20 trading days. Interestingly, the three key indexes closed the week with gains, with the Dow Jones taking the lead. It logged the biggest gain of 1.78%. The Nasdaq lackluster, being under pressure from Apple, whose facility in China delivers worrisome news. The flagship factory for Foxconn in China is expected to decrease its supplies in November because thousands of employees quitted the jobs in the light of the last wave of discontent. Clashes in China persisted over the weekend and on Monday, since midweek Beijing reported new daily records of COVID cases. On a Monday, the authorities updated a new peak for 5 days in a row. The lion's share of the cases is symptom-free. No doubt the protests against the COVID restrictions in China and social unrest are the culprit of a global risk aversion. Market participants are trying to puzzle out what to expect from the second largest global economy. Any lockdown release will instantly boost the appetite for risk. On the contrary, tightening restrictions will spark off fears of a low demand, a downturn in manufacturing and logistic problems. Apart from global jitters, Wall Street will evaluate consumer activity in the United States. The pre-Christmas season is an accurate barometer of a consumer sentiment. The information on a Black Friday was mixed. On the one hand, retailers did not report a flood of consumers. On the other hand, retail sales were extremely robust. The U.S. National Retail Federation forecasts that Christmas sales, including e-commerce, could expand 6 or 8% in November and December. It's 13.5% lower than the surge last year, following a growth of 9.3% in 2020. Such data might cheer up investors and in turn propel a Santa Claus rally in the stock market. On the flip side, strong retail sales could encourage the US Fed to make its rhetoric more aggressive. In any case, the equity market is at the crossroads, being sensitive to the Fed speakers. To sum up, the New York session today could be gloomy. Apart from pandemic fears, Fed policymakers might put extra pressure on Wall Street. James Bullard and John Williams are due to speak tonight. The US dollar gained ground on Friday, but it's trading lower today like most assets. Its index lost another 0.4% in the pre-market and sank to 105.6. The intraday corridor for the index is seen between 104.90 and 106.20. Despite a minor growth on Friday, the US dollar is pinned at multi-month lows, being wound down by the prospects of a moderation in the Fed's cycle of rate hikes. The Fed's minutes released on Wednesday showed that most members of the rate-setting committee found it appropriate to ease the pace of further rate hikes, besides an increase in the U.S. initial unemployment claims and a lower-than-expected CPI convinced investors that the U.S. dollar might snap its rally. From now on, analysts suppose that the U.S. Fed will raise the funds rate by 50 basis points in December, and this likelihood is measured at 71.10%. The federal funds rate will reach its peak in June 2023. The US dollar index is consolidating at lows, but it could find some catalyst this trading week. Traders are anticipating a series of macroeconomic data: GDP, the ADP employment report, JOLTS job openings, PCE price index, manufacturing PMI, non-farm payrolls, and other reports. The cherry on the cake is a speech by Fed's Chairman Jerome Powell on the economic outlook and the changing labor market, which is due on November 13. His remarks after the last policy meeting will matter a lot to market sentiment. If he does not comment on easing financial conditions, the US dollar might lose its short-term support. The Canadian dollar is also going through a significant week. A lingering decline in oil prices dents the loonie strands, thus putting pressure on the USD CAD pair. On Monday, the instrument grew 0.5% to trade at 1.3445. The intraday corridor for the pair is seen between 1.3390 and 1.3520. Commodities and the Canadian dollar have fallen prey to investors' fears. The COVID resurgence in China fueled sell-offs in the commodity market. Thus, oil prices lost 3% intraday on Monday. China is the main culprit of global pessimism, but there are other headwinds. The meeting of EU state leaders slated for Friday evening was cancelled. The agenda was the discussion on the Russian seaborne oil price cap suggested by G7, and the EU governments are diverted in viewpoints about the exact price level to avoid the global shock with the oil supplies. Poland, Estonia and Lithuania insisted on a much lower price cap than $65 or $70 a barrel. On the other hand, Greece, Cyprus and Malta advocated for a higher cap or some compensation to offset would-be losses. Apart from the EU, oil prices are weighing down by OPEC and its allies. The major oil exporters will hold the next summit on December 4 in Wien. The crypto market has been hit by sell-offs long before Black Friday. Bitcoin has been trapped sideways. Risk aversion pushed down the flagship crypto, and the token dropped 2.3% intraday on a Monday and approached $16,000. Crypto traders are discouraged by recent news. Government watchdogs are investigating Genesis Global Capital in terms of its connection to other crypto firms. In fact, Genesis does not serve individual investors directly, but deals with the products offered by other crypto companies. Amid new government probes, crypto assets are drifting lower. A sell-off on Monday affected all popular altcoins. Ethereum, Solana, Ripple and Litecoin shed from 2 to 4.8% intraday. Bitcoin is likely to trade in the corridor from $15,400 and $16,300 today. And we wish you profitable trading. See you online tomorrow.